Welcome to the Why We Build podcast. Join Greg Wallach to explore the world of remodeling, whether you're on the production team, design team, or managing the whole show. You can expect insights, tips, and stories that inspire and educate. So, let's dive into the Why We Build podcast.
Welcome to the Why We Build podcast. I'm Greg Wallach, your host. As always, any suggestions for guests or topics for episodes, please let me know. I'd love to hear from you. It's greg@remodelersadvantage.com. So, as you know, this is the show where we talk about the real work behind remodeling and building, but not just the projects. We talk about people and systems, decisions, and the lessons that help us build better businesses and better lives. Today's episode is one that a lot of owners, production leaders, and managers need to hear, especially if the business feels busy, but still feels tight. We're talking about a trap that shows up all the time in construction, remodeling. When things get uncomfortable, the first instinct is to go chase more revenue, more jobs, more volume, more top-line sales. Sometimes that helps, but sometimes it just hides the real issue. If the financial systems are messy, if job costing is weak, if margins are unclear, the books are behind, then more revenue can act more like a bandage. It can cover the problem for a little while, but it doesn't fix it. In fact, it can make the underlying issues bigger as the company grows. That's why I'm excited for this conversation. We're going to dig into what profitable companies do differently, common misconceptions about accounting in construction, and how clear financial processes become a real value driver in business. If you've ever said we're busy, so why does it feel tight? This episode is for you. Now, my guest today is Steve Heintzelman, owner of Odyssey Financial and Accounting Solutions. Now, Steve founded Odyssey in 2022 to help business owners get the financial support they deserve. He grew up around entrepreneurship with a mother who runs a third-generation lumber company and a self-employed father in the golf industry, which gave him an early appreciation for what it really takes to build and run a business and the sacrifices owners make along the way. Now, before launching Odyssey, Steve worked at Ernst & Young, where he earned his CPA license and gained experience auditing companies ranging from pre-revenue startups to billion-dollar enterprises. Now, today, Steve and his team work closely with construction businesses, especially builders and remodelers, helping them understand their numbers and run more profitable businesses through job costing and accounting advisory. His mission is to give owners the financial clarity and tools they need to achieve their goals. Welcome to the show, Steve.
Yeah, thanks for having me on, Greg. Really excited about the opportunity and love the podcast you've put together.
Well, thank you so much. I appreciate that. And I'm really glad that you're here as well. For those who don't really know you yet, tell us a little bit about your path into accounting and how you ended up focusing on the construction business. I didn't know about the golf background. I thought that was really cool.
Yeah. My dad is big in the golf industry, so I grew up always playing golf and taught me taught me the rules of the game from an early stage for sure. And then also grew up working the summers. My grandfather was at the helm at the time in the lumber yard, starting as soon as I was able to work pretty much through mid-college. But fell into accounting maybe just for my appreciation of the fluidity of accounting across all businesses and being able to understand any business from the lens of an accounting. And so enjoyed the classes, and it was one of the classes in colleges that I didn't hate, while everybody else seemed to be hating accounting classes, and knew it would lead to some opportunities down the line, and so stuck with it. Got a cool opportunity to start my career at Ernst & Young, where I saw, at a really high level, what on the audit side, what goes into creating the financials. Got my CPA there, learned from a lot of great people, saw a lot of great companies. And something probably either about my time at Babson, which is teaches all about entrepreneurship, or growing up with a couple business owners in the household, pushed me to this path where I started Odyssey just over 3 years ago, with the hopes of basically bringing what I saw at Ernst & Young in high quality financials that typically aren't available to smaller businesses because people coming out of Ernst& Young typically go to the businesses they're working with, and it's not always available to the local small businesses, that type of financial support. So the goal was to bring some of that experience I learned there, to bring high quality financials, to bring the value of accounting that I see from my end into businesses that can't always afford to hire that in-house.
So you mentioned you grew up around entrepreneurship, lumber yards. How did that shape the way you see business owners today, especially in construction and remodeling?
Yeah, I would say it definitely. By the time I was in college, in high school and college, my mom started taking over some of the operations for my grandfather. I mean, he worked till the day he couldn't walk anymore. He was in the office, even beyond his role in the company. He loved it. But being able to understand how the issues that business owners are facing, from personnel issues to strategic issues that aren't just, hey, this is my job role. It's like now you're seeing everything in the business, and having conversations about profitability, cash flow, strategy, all that stuff, that I was opened up to early on. It's definitely, I enjoy having conversations with business owners. I love understanding what they're going through, and I also understand the sacrifices they're making and the risks they're making, that isn't always rewarded, isn't always directly rewarded. And so my goal is to hopefully help business owners out and being able to give them the financial support so they can reap the benefits of everything they're putting into the business. And a lot of times, in the small business world, they're putting their lives into their business, and unfortunately, not all the time is they're getting the reward for that. But that's definitely where I hope to continue to provide value to business owners.
I think it's great, especially with your background, that you work really directly with owners now. And you mentioned sort of earlier the idea of affordability and what people deserve and what businesses deserve. Um, Coming from doing audits for $1 billion companies, why did you want to focus more on small businesses?
To be honest, you can see a little bit more of an impact on the work you're doing. You can see when you help a business owner start to turn profitability, they can give that bonus to their employees, or you can see when you help alleviate some stress from business owners and they can finally take that vacation. There is value, in the large companies as well, but it's not as direct with the people you're working with, or at least that's what I found. And so being able to work with small businesses, it kind of really elevates the value that you could see and the impact that you're having at a very direct level.
So when you're working with business owners, and we mentioned this again in the intro, but why do we default to we just need more revenue when cash gets tight?
I mean, it makes sense. Cash is tight. Let's go make more money. And to make more money, let's go get more business and drive revenue. And seeing that revenue number go up, is definitely, it's rewarding to be like, okay, we got more revenue. We feel like we're in a better spot. And it's, I don't know, maybe just classic instinct, that when things are tight to get more revenue. I'm not saying that's always a bad thing. That definitely helps a lot in the issues. Having a strong sales pipeline, having strong strong jobs in the backlog, but a lot of the times it's overlooking what some of the core issues might be in the current day.
So when does revenue help, and then when does it become the bandage that's hiding the bigger problems?
Revenue helps. I mean, revenue probably helps in any situation. Where you're getting the most out of the new revenue you have is when you have really clear understanding of the numbers behind that revenue. What the trickle down profitability of that revenue is, where the revenue is coming from, so you're seeing the ROI in your sales and marketing dollars. And what that means for, if you're driving revenue, what does that look like for hours in the business? Is that more hours in your head, or is that, you have a hire that you can make, but you have a plan in place and you have clear understanding of the financials behind that revenue that you're bringing in, rather than just, okay, we see that top line number going up and we're going to continue to figure out how to, fill in all the gaps behind it.
So what are some of the underlying issues that more volume, more revenue tends to cover up in remodeling? Or
Yeah.
any business really, right? This is probably relevant to any kind of small business out there.
Yeah. It definitely it can relate to probably all small businesses. We find it a huge priority in remodeling with um, the cash flow timing, the cash flow issues that are super highlighted when you're doing a bunch of construction jobs. Because ultimately, at the end of the day, every single one of your jobs is almost its own small business. And as you grow, those jobs get bigger and bigger, and you're almost running multiple small businesses in a sense. But a lot of the issues that we see is first, not having really clean insight into the actual profitability that's coming from the revenue. Just a common classic example is, that $50,000, $100,000 job might be more profitable to your business than that $1 million job. Even though, yeah, you want to keep the business churning and more work out there allows you to bring in more staff and more team, but understanding which projects are most profitable for you, whether that's that $250,000 small renovation or you love the new home builds, you do really well in those are the $2 to $5 million projects, whatever that may be, and understanding, okay, what revenue is good for us or what revenue is just keeping us busy and not letting us focus on how to actually make more profit in the business.
Yeah, one of the things I have a very, very much a production bias. I probably say that every episode. I'm about production, and that's my thing. Um, I think what happens is when we are trying to get that revenue in place, um, we're not giving ourselves enough time for the feedback loop. Like, what mistake do we make on the previous job that we can fix on the next job? And unfortunately, then I don't know, pricing, estimating. I think all those things get impacted, which in turn is the profitability, right? That's the whole thing that we're
Yeah.
trying to do here. Now, in
Yeah.
the show notes that you sent me over, you mentioned a misconception about accounting in construction. What do you think that misconception is, or the biggest misconception? Why'd you have to use misconception as a word? I keep stumbling over it. But anyway, what's the biggest misconception that owners have in terms of accounting in construction?
Yeah, yeah. For me, the biggest misconception is that accounting is just a cost driver. It's just adding more overhead to your bottom line. Whereas historically, sales and marketing are sales drivers, are revenue drivers, and then there's certain profit drivers as well. But typically, accounting is looked at as just an overhead cost, something you have to do. Probably the fault of us accountants throughout the history of time, focusing on the compliance of things, which again is super important. And in my opinion, is the basis point and the start of everything we do is the compliance, but there is so much more value we can add. And it's, yeah, we're not going to go out there and bring in a customer and be like, hey, here's, we're driving revenue by bringing this new customer. However, having really clean financials and helping business owners or helping the team understand, hey, what levers can we pull to improve our cash flow? What levers can we pull to improve our profit? Hey, which jobs are actually the most profitable? How do we keep an eye on our labor burden so that we're pricing out these jobs correctly? At the end of the day, it's not going to be a new customer in the door that's like we can prove, hey, we're valuable because we brought in X amount of business. But if we're able to help guide the decisions of the team, we should be able to drive value to that bottom line number and to drive profit, just by having really clean information for business owners or the team to make decisions on. So transitioning that thought from, okay, we just have to, pay for an account. We have to pay for this admin stuff and it's just an overhead cost that we're not going to get back. If you're actually approaching it from the correct way, you should be able to get a lot of the value back. And one thing, I always say to our clients is, if you're $1 million firm and we're bringing back we're helping you improve even 1% of revenue, that's $10,000 back in your pocket, and that at scale, and that's just a small example, but at scale that's going to continue to go to your bottom line, and we'll continue to prove our value beyond just the cost side of things.
So, a lot of the companies that we work with, or I work with, you work with, they'll have a bookkeeper, which is a great, and it's an essential role. And I would never take anything away from that person. I'm sure they do a lot. But what's the difference between having a bookkeeper and then actually having, financial visibility that helps make decisions?
Yeah. The difference is the bookkeeper and having strong bookkeeping is going to get you all the information you need up to the reports. But then the next level is, okay, that's when the real work starts of, okay, now we have strong bookkeeping, we have strong numbers. Now we actually have to spend the time. And a lot of the times business owners are busy and the business is continuing to move forward, that this time isn't spent, that once the financials are prepped or once the bookkeeping is actually done, to spend the time to review and understand what's going on in the business, and understand in real time. So, every month you're seeing where you're at in the business. As jobs are going on, you're reviewing the financials of the job and not just, waiting to see where things land. So the bookkeeper is super important because without the clean data entry, you have no clean financials and you can't make any clean decisions on that data. So that is a lot of the work to get clean financials comes from that bookkeeping process, and that needs to be clean to be able to be valuable. But then that's when the real work starts of, okay, let's actually use this information in the business, so that, the financial and the operational side of the business are working hand in hand, to get the best results.
So I hear it all the time from business owners, from production managers, design managers. They talk about getting their books cleaned up. And where do you see, most often what breaks down in so-called clean accounting and financial processes for the folks in our industry?
Yeah. I mean, the start is just, I I always try to view this of what we want to get as an end result, which is really the reporting and how we want to see the business. And that's going to vary depending on the specific type of jobs you're doing. But I typically see, we need to get cleaned up is the business is busy, and the accounting team staying top of making sure bills are paid and making sure invoices are going out, but they're not spending the time to make sure the balance sheet is clean, to make sure all the accounts that need to be reconciled are reconciled. And so the business is still moving forward, but the financials over time, certain transactions might not get reconciled or might get missed. And then the next piece is the job costing side of things, because the first level is making sure, transactions are coded to the right expense account and to, whatever the business expense account is. But then the next piece is there's so much value in the job costing and making sure not only it's the income and expenses are going to a specific job, but even at the phase of the job and the different ways you look at the job, so that it aligns with the way you're budgeting. So obviously the first step is making sure you have really clean reconciled financials, but then it just continues to go into, oh, people will view it as, we don't have clean financials because we can't see a really clean job P&L. And so it can go deeper and deeper, but the start is making sure everything's reconciled and making sure there's basically some type of month-end close process on a monthly basis, so that over time these problems don't just linger and stay out there.
So sometimes I think owners, and I love business owners, but sometimes I think they're a little afraid to hear the truth. Yeah, I see it all the time. I'll look at a balance sheet or a P&L, and their AR will be through the roof. And they'll tell me, oh, no, it's not too bad. But then when I ask them, well, how much of that is over 60 days? Then you find out a huge chunk of that, and they're probably not going to get that money. So I think that's some of the things that bothers me when I look at owners' P&Ls is AR. I don't know, collect your money. Maybe that's
Yeah.
something I heard from a place that I worked before. But what are some warning signs that the company's numbers, whether it's the balance sheet, the P&L, the WIP, are not telling the truth? What's happening in those cases?
Yeah. A lot of the times it is, when the numbers show profitability and cash continues, you look at the bank account month to month and it continues to be super tight. And that doesn't necessarily mean that the financials are clean, but there's probably something in your business process that isn't working to allow you to have a steady and predictable cash flow today while your company is showing profitability. And there might be some things that we clean up and it might not be as profitable as it is, but typically, it's like, hey, we're doing fine, our P&L is good. But then you look at the bank account and that could be through, ARs just through the roof, or we're paying our bills way ahead of expectation and not collecting the AR. Or the contracts are set up where we're not taking enough deposit up front. We're getting overrun with retainage through the job. We're getting behind. We're being underbilled in all of our jobs. Or we have really messy invoicing, so that when we are sending these invoices, people are like, "Oh, that doesn't look right. I'm not paying that." And so I would say the what I commonly see is, yeah, the P&L might look nice, but if cash continues to be tight in the bank account, then there's something we should be looking at in your business to try to change that. And there's reasons why cash will get tight at times, and that's just the nature of the construction business. There's a lot of inflows and outflows, but typically that's a sign that there's something not working in the business to allow you to operate more comfortably with that profitability.
I tell you, as an employee, that was something I never understood. We were doing all these jobs, but they were always telling me cash flow, cash flow. I never understood it. And luckily, I learned more about it and certainly can empathize with owners when they're, again, when that AR is up too high or I think we're very fortunate now in that the project management softwares we have allow us to keep track of time like in real time. It used to be a 2 week delay before you
Yeah.
could make sure what your time, your labor hours were and that sort of thing. But I think now it's getting better to be almost real time, as long as those receipts are getting turned in and that sort of thing. So if an owner is listening right now and they're stressed, they're busy, they're unsure of where their profit's going, what's the first step they should take in the next 30 days?
It's a good question. In the next 30 days would be to spend the time to have a really good understanding of your balance sheet in P&L. And it can be intimidating when you're not comfortable with it. And luckily, I mean, there's a lot of tools out there that in this AI enabled world that you can be like, hey, what do these accounts mean? But to have a really good understanding of your financials, and then to be able to see it. I would also look at just the financials company and then also look at how much information you have at a point in time on the financials of your jobs. First is obviously understanding where you're at as a company, and then the second is okay, when we want to pull levers, a lot of it in the construction space is going to be some type of job costing related lever that you're going to pull. There's obviously some you can do at the company level, but seeing at your current reporting level and what you have set up right now, how easy is it for you to pull, information on how a job's doing at any point in time? And that knowing where you're at today at those levels will allow you to be like, all right, now what is the next step going forward? What information do I want to be seeing on a consistent basis? But that's really probably the next 30 days is just having a really good understanding of where you stand today. Because if you don't understand where you stand today, then you won't know what decisions to make going forward.
So as a CPA, what are like two or three habits or processes that are, non-negotiables for you? Probably maybe the biggest opportunity for improvement for construction firms.
Um, for construction firms is reviewing jobs either on a weekly or depending on how long the job goes, either a weekly or monthly basis on how they're doing, because that is probably the main area that you can lose track of profit, and reviewing your job revenues, what's actually in the door versus what you're spending versus what you budgeted to spend, on either a consistent basis, and just having a process so that it's not like most firms are good at having some type of job close review, but having a system, even if it's just at a high level, to have, okay, here's a report of what I'm seeing on the job on a monthly basis, to understand at any point throughout the project where we're at and not just waiting to see where things land to address anything. So having some systems to look at the job level P&Ls.
So job costing is very important. And, I think they should do it as often as it needs to be done, like you said, whether it's weekly, bi-weekly, depending on the size of the job. But I feel like they look at it and then they don't do anything with it. They just know they're off, and then nothing happens. How do you get your people to execute or really take that information and use it as a tool rather than just use it as information?
Yeah, the first I guess we probably try to prioritize simplifying as much as we can. I get excited and I can go into the weeds of pretty much anything in the accounting side of things, and that gets me fired up. But for it to actually be useful is to be simple to one, the time it takes to get it, the time it takes to review it, and then to have just, very quickly, even just a budget versus actual of where we're at. And the second piece is looping in whoever is working on the job to understand this as well, because the owner has so many things on their shoulder, and sometimes the owner is the one running the jobs, but the PMs in the field and making sure they are looped into the financial side of things. Some things we've looked at is tying incentive-based, comp to the PM so that they're aware, they need to be aware, and then they're incentivized to actually perform on the not just the quality of the job, but the profitability and the performance from a accounting standpoint on the job. So keeping it, having some type of simple report that can be reviewed, but also looping in the PMs from, the budgeting and estimating process through, okay, now where are we at throughout the job so that you're getting feedback from them? Because a lot of times, there's simple things you can catch just by looping in the guys who are on site. It's like, oh, well, that, we're off on that budget because, something popped up and then we had ran into some extra rot. And it's like, well, is that a change order we should be addressing with the team? So, the owner, it's great for the owner to know, but, the people who are actually, on the floor, and sometimes it is the owner, but most of the PMs is looping them into the conversation of the accounting side of things, which isn't always what they want to be doing, but forcing them to be in the conversation will get everybody on the same team in addressing these issues, rather than just seeing it and moving on.
You said two things that really stood out to me there. And the first is simplification, right? One thing I see is overcomplicated processes and systems. Like a 257 step pre-construction system or process is not okay. It's too many steps. I feel the same way about cost coding. I feel like some folks, they want to cost code their lumber first floor, second floor, floor system, like all this stuff. And it's no one's going to clock in like that. No one's going to be able to
Mhm.
do that. So simplification, I think, is a really is a underused tool in our world, but definitely in our businesses, right? Simplification. The second thing you said was looping. One of the things I teach often in my classes is the idea of the feedback loop. Very often we collect that data, we collect that information, but we don't give it to who it needs to go to. And we're in the same place we are on the next job and the next job, even though we know what's wrong or what needs to be changed. We just don't close that loop. So if you take anything from this episode, those two things, simplification and the loop, let's loop everyone in. Now, strong financial processes, of course, are going to increase the value of the company over time. Owner wants to scale, takes pressure off themselves, or eventually exit. So how does this help an owner? Let's just say scale. A lot of people are talking about succession right now, but let's just say scale. How do these strong financial processes increase the value?
Yeah. I mean, the first piece is having it set up, and then it's clean accounting and financials are going to become more valuable over time, because you're able to track the performance and compare it to where you were 3, 5 years ago. And you're like, okay, where are our margins now versus where they were 5 years ago? And if everything's clean, you're getting really quality information, to address, okay, where the business is at from what we learned in the past, what we've already implemented, how has that changed the business? So it's going to become more valuable over time the longer you have clean financials. And the second piece is making decisions going forward. Knowing where you're at today is going to allow you to prioritize, hey, what are our weaknesses in the business? Where can we improve compared to the industry average? Looking forward, so knowing not just from what you think is what you think is, causing you the most issues today, but seeing from a financial level, okay, compared to, peers in the industry, what should we try to improve on to get a better business that looks like, we can do with what it looks like the other peers in the industry are doing looking forward, and then being able to plan from having really clean data now looking forecasting in the future, just even a year to 3 to 5 years, and knowing, okay, here's where we're at today. Here's what we think is actually realistic, and we have kind of clean numbers today to work on, and what would it take, job number, size of jobs, the team members that we would need down the line, to be able to plan for the future. And obviously, if you're around that succession or exit planning plan, to have really clean financials and data, not only today, but in the past, when people are looking at your business, they're much more they can operate and make decisions and more confident. And it's definitely more appealing, when you're like, okay, I know this business was run well. I can see their financials. I know exactly where they're at. I'm actually interested, and it doesn't seem like I'm just going to get in there and it's going to be a mess. So, it's definitely more attractive whether your succession plan is someone internal or you're looking to sell down the line. Having really clean data is going to attract more buyers.
All right. Any patterns you see in profitable construction firms that more owners should pay attention to?
Patterns, I would say, is kind of coming back to that feedback loop, is having consistent review and feedback with the key contributors to different areas of business, whether that's the estimator, whether that's the PMs, and having a consistent cadence of um, meeting with them so they understand where the business is at, and also the owner is able to now get insight from their team, rather than just trying to see from a high level what they think is going on in the business, and being able to get feedback and ultimately aligning that with the financial side of things. But even just in general with the business side of things, the operational side of things, is having consistent feedback loops and having some type of cadence of consistent meetings, not to try to overkill with meetings, because we obviously a lot of our work is billable rate, focused on billable rates, but yeah, having consistent feedback loops so that the issues are being caught in real time and not letting linger over time.
All right. I got 5 rapid fire questions. These are about business. These aren't the fun questions yet. We're going to get to that first, but I mean, this is all fun. Like you make accounting
Yeah.
fun, Steve. I want to let you know that. But all right, job costing updated weekly or monthly. What do you prefer and why?
Um, I prefer I like well, I like monthly because it aligns with the financials, so everything's kind of on the same flow structure. Even though weekly, to me, it depends on, and I hate to say depends answer, but it depends on the size of the job. If the job is, a couple months long, or even up to a year or over a year long, monthly probably makes more sense because you're trying to look at the return on the time you're spending on it. But if it's shorter jobs, looking at things weekly, because if it's only a 4 to 6 week job, every single week, there's a lot of movement in the overall progress of the job, compared to something that's lasting months. So, not a direct answer for you there, but
No, I think what I would say is project managers probably weekly and owners monthly, more when they're doing their month end, that sort of thing. That would be my
yeah,
take.
I like
Um,
that.
I know the answer here, but I'm going to ask you anyway. Profitability or revenue?
Profitability.
Right on. What's one metric you wish every remodeler checked more often?
Um, I would say probably either their quick or current ratio, which in accounting terms is, some combination of your current assets divided by current liabilities, which just gives you a sense of where are you today compared to the liabilities coming up, and knowing, okay, no matter what the profitability says, where are we from like a cash flow standpoint, an asset standpoint, to be able to operate, going forward, and it'll help you focus on what is the most important issue today.
Excellent. What's one financial report owners avoid but shouldn't?
Probably the balance sheet. Any type of balance sheet comparison. Everybody loves looking at the P&L. You can see kind of the performance, profit, revenue, but the balance sheet is one that's not as exciting, but it will highlight any issues in the business, and it really tells where the business is overall at. Not just how much money they're technically making, but what is the backbone of the business.
Okay. The last one. What's one habit, this would be bad habit, that creates the most accounting mess in construction companies?
Um, I don't know. There's probably a whole bunch of habits that could contribute here. I would say, um, just yeah, we'll make an exception, and we'll deal with this later. And exceptions become exceptions to the way things are done or the way things are processed on the accounting side of things. Everything should be processed, and the more and more exceptions that are created for, whatever needs to be done in the business typically creates more complexity and more mess down the line. So trying to stick to, hey, this is how we operate, this is how we do things, this is how we get paid, and there's going to be exceptions, but trying to minimize those, to minimize the complexity.
Follow the process.
Yeah.
Absolutely. All right. These are a little more fun questions, maybe a little bit lighter, a little bit looser, but you grew up around a lumber company and the golf world through your parents. What's one lesson from each of those worlds that still shows up in how you run your business?
Um, the lumber company is probably hard work. Just working in the yard, my grandfather would come around, and if you were just standing still, and didn't have a broom in your hand, you'd be getting a yelling at. And then the golf industry, probably just the ability to just face the problem at hand. for all you golfers out there, you put yourself in some pretty, ideally, you're on the fairway, you're on the green pretty consistently, but that's not how the way golf goes, and that's not how the way business or life goes. And just trying to evaluate where you're at and try to make decisions on where you're at, and not just, get derailed when you're sitting on the side of a bunker edge, where we're not planning to be. So that translates to business a lot. There's definitely in our mind of exactly, hey, where we want to be in a year. Typically, it's not going to line up exactly, and things are going to be thrown at you, and you're going to be put in positions that are not where you want to be. But just being able to continue to move forward, and you got a long business ahead of you.
So I recently have acquired a crippling golf addiction. I love it. All of a sudden, my bosses got me hooked on it, and I found that yardage books, right? I thought I was looking at yardage books and I was thinking about business, like because I'm like, if I tee off, because I used when I first started, wherever the ball landed, the ball landed. But now I'm thinking, where can I put the ball so I'm in the least amount of trouble for the next shot? And so I'm so glad you said that, because I really started thinking about golf from that perspective. I think it's it's a great game, and for lots of reasons. But I'm glad that you said that. What
Yeah.
is your I knew I was wired for this work moment? It's the moment that you realized you actually enjoy helping people make sense of numbers.
Um, that's a tough one. Probably when I guess kind of seeing when I first started Odyssey, working with business owners and just getting them clean financials. But when we first started seeing kind of, as we say, like the ship turn, a business is a ship, and you can make all these adjustments, but it's going to take a while for it to take its course. And when you first start to see, okay, we're implementing things, and you get your first sign of, oh, wait, this job came in, more profitable than we even budgeted, or hey, this month we made more money, or hey, look at, and business owners don't always get excited about, look at your balance sheet is very clean, and just being able to see kind of the processes that we put into place start to come to fruition, and kind of seeing the business owner understand, hey, oh, I see what's going on here. I understand the value of this now. I understand, even my numbers and where we're going. And that I really enjoy, sitting in the weeds of accounting isn't typically fun to everybody, but when you see the results of really clean financials, is when I was like, oh, I love accounting, and a lot of people don't. And if I can help other people appreciate the value that it can actually bring while kind of supporting them, was probably the moment that I was like, yeah, I enjoy this. And me getting excited about this is probably a reason why I'm still doing it.
If you could give every construction owner one financial superpower, what would it be and why?
Hmm. Um, Financial superpower.
It could be like instant job costing or perfect forecasting or collections. Mine would be collections. Yeah, made that clear. Collect your money.
Yeah. I would say probably if we could come up with, if they had the ability to perfectly estimate every job, that would make life a lot easier.
No business owner should be estimating. That's my
Yeah.
that's my rule of thumb. What's a small business owner habit that you admire most, even outside of construction?
Um, Probably just continuing to be with it. I guess in the smaller business, continuing to show up with the team every day. It's easier, I think, at larger companies to hide away in your office, but the habit of just, having understanding and a relationship with, anywhere from the front desk person to, your CFO or COO, and having relationships across the business is probably a habit that I love across the small business community.
All right, last one. If we checked in a year from now, which I hope that we do, what would you be most excited to say Odyssey helps its clients do better?
Yeah, I would probably say that we help our clients become more profitable, which isn't always something that accountants preach because it's, hey, you have to do this, it's compliance. But if we can continue to live up to our standard and help our clients become more profitable over this next year, which we've had success so far in the past, and continuing to do that would be a success in this next year ahead.
Steve, great stuff. Where can we find you?
You can find me LinkedIn, Steve Heintzelman. And then our website is odysseyfas.com, which just to check out the business there. But yeah, LinkedIn is pretty much where I spend a lot of my time now on the social media front. Is everything. It's LinkedIn. So feel free to, would love to connect with anybody else outside of here. And feel free to, and you can, I guess, add my email to this if you want. But if anybody hears this and wants to connect, feel free to shoot me a message on LinkedIn, and I'd be happy to talk more.
Yeah, we'll definitely put that in the show notes. I'll get the link in the show notes for you, for sure.
Awesome.
Steve, thanks for spending some time with us. I really appreciate it.
Awesome. I appreciate it, Greg. Thanks so much.
You bet. What a great conversation. I really appreciate how practical and honest Steve was. I think one of the biggest takeaways for our audience is this: the more revenue is not always the answer. The systems underneath the business are weak. Growth can actually make things harder. But when owners have clean accounting, strong financial processes, and real job cost visibility, they can make better decisions, improve profitability, and build a stronger company with less guesswork. That is the message our industry needs. If you want to learn more about Steve and Odyssey Financial and Accounting Systems, you can find him at odysseyfas.com. And as always, thank you for listening to the Why We Build podcast. If this episode helped you, share it with a fellow remodeler, builder, or leader on your team. These conversations are how we make this industry better. Until next time, keep building well, keep learning, and keep leading.
That's it for this episode of the Why We Build podcast. We hope you found something valuable to take back to your team. If you enjoyed the show, be sure to subscribe and leave a review. Please send in your ideas for future episodes. Thanks for listening, and we'll catch you on the next one.